Hello guys. I hope you are having a great day there. So, yesterday I promised you that I'm going to give you at least one video each and every day. So today we are going to look at VIX 100. So if you're someone that has watched at least one of my videos before and you like this style of trading, so can you please just subscribe for me there, or you can even come and join the mentorship where you'll be able to learn all this stuff in a closer way. It's just like maybe you and me in a session and stuff like that, where I will explain it even further. All right, let's get started. So, the way we trade, how we do things here, the approach is always the same. It doesn't matter what we're looking at. So that's what I teach. I teach you a strategy that you can apply it on any instrument that you like. So today I want us to look at something different, something that one of the guys in the mentorship group too said she was struggling to sort of make that final decision as to like what to do now. So I will do it now for everyone to see. And yes, let's get started. So usually, or as always, you have to check your monthly chart just so that you know where you are, right? So I don't have a lot of candlesticks here. I don't know if it's just my phone or well, this broker introduced this thing in 2019. So I have stuff from there, but that should be enough for me to make my decisions. So this is our monthly chart, right? On our monthly chart, we are at the all-time high. We are moving to the upside, because you can see we just make a movement like that. So we are fairly to the upside, but it doesn't mean that on your if you're trading H1 you can't sell. No, because remember, your H1 you can sell and hit your TP before this structure on the highest time frame change. So that what you just need to keep in mind is that if those high time frame are pointing up, and on your smaller time frames you get a setup where you feel like taking them to the downside, you must just take that setup until the next opposite structure on that the time frames that you're trading. Don't try and push it too much, because the more you push it, it's like you're trying to interfere for long term, of which for long term this does not look like it's going down. You see? So that's why you need to be careful. You just need to make sure that the time frames that you're trading, those are the time frames you use to make your decisions. Your TPs, you set it based on the structures on those time frames, right? So this one, which is a monthly chart, is to the upside, but we can see that for the past 3 months, yes, it's been pushing to the upside, but the momentum is not the same. I mean, if you look at what we're having here when the price was still somewhere there, look at that type of a candlestick and what we're currently having with these three candlesticks. Yes, the bulls are pushing up, they're reaching, new highs and stuff like that, but they're failing to close there. The sellers quickly push them back, So you can see that the momentum is no longer the same. Yes, we are pushing up, we're not yet bearish on this time frame, but the signs that we are seeing here, they suggest that there is some weakness now in the bulls. That's all that we need from this time frame. And you can see that even if you were to try and you put a trend line, it will stay somewhere there, and then your support is still quite far. All right, so that's all that you need. So you're still too high. If you were to get trades to go short, you can go short, but until the momentum, the structure changes, or maybe on this time frame, maybe if you were until the price was to make maybe give you a bearish rejection candlestick and break the range, then yes, you can try and those trades that you have on your time frames that you're trading, you can now maybe try and push them a bit, hold them for even slightly longer than what you would have done. Why? Because now on monthly the structure looks like it is changing. That's why you had that bearish rejection candlestick and you even broke the range of that candlestick. But until that happens, here we just have those pin bars, but the pin bars alone without you breaking the range on the other side is not enough. So until that happens on your smaller time frames, you are targeting the next structure. So if maybe the price was to come lower than that, then you can say it has a chance to come to at least this. If it breaks that, the next one would be the main zone, which is the support, and it will also be touching what the trend line. That's why it will come with what we're anticipating, a deeper pullback. Because even if you assess, this thing has never broken any structure. Here it came to this this zone here, and then it pushed up, and then it went up to what, the high that was there before it. You need to keep in mind, even the guys in the mentorship, I always tell them that you need to be able to separate a swing high and a resistance, right? So this one is a swing high because of what it did. That's where accomplishment comes in. This was just us pushing up, and then because remember, you are bullish, you're just having a pullback, but that pullback did not do anything. It was just a pullback. Had it done something, this was going to be looked at as a resistance. You can use that when you're having your trades from this, for instance. So this is something that I teach so that you can be able to identify the areas of significance and those ones that you shouldn't be entertaining them. So because you are bullish, if you were to get trades here and you're trading, like for long term, Yes, you can't look past this point and say I'm gonna place my TP there because of what? You don't know why the price turned here the last time. You just turned there, but it didn't do anything. You don't know why it turned there. So that's why around this area, it's gonna be your TP1 if you're trading these higher time frames, right? Because of what? You are saying, what if whatever that caused the price to turn here causes it to turn again? But you're not saying I need to sell here. Why are you selling? Because if you're trading this time frame as one of the time frames that you're trading, this is to the upside. This is purely bullish. Why are you selling? Yes, you can exit at that swing high, but you can't look for a sell trade there. This is where you need to have the rules. You need to know which point do I say it's a. That's why you will find people. That's why I don't trade things like double top and triple tops because they don't have anything to distinguish and say here you cannot search for a double top or you cannot search for but again triple top or double bottom whatever. It just says when the price gets to this you're gonna say it's a monthly, then you're gonna be searching for trades to go short here. You don't even care about the main or the bigger picture on this time frame. For you, you are just saying the last time the price did this, and then when it gets to this, people will be telling you about what sell. We have a double top. How do you say you have a double top whereas the price is still here? How do you know that this thing has turned already? Because I used to think that a double top is something that when they're talking about breaking the neckline, then that's when they execute. But in this case, when you're telling me to execute there, I don't see anything. The only thing you're telling me that we are trading is that this is a double top. You cannot do like that. You need to know which points, which swing highs are you going to look for double top from, or which ones are you going to leave out and say this one is not a good area for me to look for a double top. This is one of them. This is the reason why I'm giving you that. You need to distinguish when a swing high is just a swing high and just giving you a pullback and not creating a resistance. You're going to save yourself a lot of money there by doing that. So that's it. That's all that we have on monthly, guys. So this is what I teach. If you're interested, you leave a comment because there's a new group that's starting with their mentorship next week. There's still a couple of spaces or slots available. If you're interested, you can just hit me up, and then even on Telegram so that uh, we can we'll take it from there. I'll just tell you how the mentorship, everything, how it goes about, how long does it last, what is it that we do actually in the mentorship. But this is the stuff that by the time the mentorship is done, you'll be able to like open a chart and still assess it thoroughly the same way that I do, so that when you come to conclusion to say I'm searching for a trade, you know what type of a trade you're searching for and why you are searching for that type of a trade. Because we can't just say we have a bearish candlestick. Already you are at saying what if the price is a blazing? No, market structure is deeper than that. All right, so now we are on weekly. Let's see what we got on weekly. Weekly is also bullish, right? It's just that there's a mess here. There's a mess here. When someone is in control and they're pushing up, it's very nice when they're pushing up like this with this type of a candlestick, or this when they're pushing down like that, right? Until we saw this, and then the steam was running out. The same thing that I mentioned on monthly to say that the monthly is pushing up nicely, but when you start giving us something like this, if you are pushing strongly to the downside and then you give us a bullish rejection candlestick and even break the range of that candlestick, that's when you're like, no ways. The guy that has been pushing to the downside, they are allowing the bulls to dictate a lot now. So that's where you can be like, nah, they are being defeated. The same thing here. So what is just that this, when you're moving up like that, is not very strong. I'm not yet convinced. At least they ended with what? A strong candlestick too. So yeah, we're still alive. We are the ones that are in control. When you're pushing up but you're just moving like this is not good. If I have a trade from this, I want you to take off strongly for me to say, yes, my trade has got higher chances of working. But when you're moving up and then you're just doing this, you're wasting a lot of time. You are spending too much time around my zone, which means what? The bulls are trying to push up, but the sellers are making it very difficult for them, which is why the price is not making strong move to the upside. So because of that, the sellers are still in it. They're not yet fully defeated. So that's why you need to be worried, because they can defeat the bulls and then you lose your trade. But when you enter a trade and then the bulls just do that, that's what you want. That is the aggressiveness that you want, especially because you're taking your buy trade at a zone of the buyers or the bulls. So that's why you expected them to kick in strongly and leave with a strong candlestick. Then your trade has got higher chances of working out. So what do we have here? So this is definitely bullish. And let's see if we can put it. You can even try and draw a trend line in there if you want. And what else? This is the nearest structure. It starts from this. It starts from that. You can put it like that, or you can even put it until there. All right. Now let's start commenting on what we are seeing on a weekly chart. The first, remember what we saw on monthly. There are those rejection candlesticks, but the price is not yet below the range of those candlesticks on that time frame, right? So what we have here, with this one, it went all the way up until there, and then the first sign of weakness that a pullback might be coming is what? Look at this. Yes, look at this. That a pullback might be coming is when you have a bearish rejection candlestick and still break the range. There's a comment that I got not so long ago on here on one of the YouTube videos I put yesterday, where the guy was asking, how do you tell, like, what is it that you do when the price gets to a zone? How do you now execute and stuff like that? And that's more like some of the information I cannot give you to you in full details, because of what? That's what some people pay for. That's why I have the mentorship, so that I can, give them even finer details. But my answer to him was that when the price is getting to a zone that you want to trade from, you have an option to just go in with a limit order, or you can, once the price touches your zone, you can execute instantly, or you can place a buy stop. In this case of a support, you can place a buy stop slightly higher than the price, so that when it is reacting from the price, you can, trade can be triggered, and then you push it up like that. So that's all that I could give him. I cannot give you more information like that. If you want more, you're gonna have to join the mentorship. So in here, if you've been following the videos, you should learn something when I tell you that when you have a bearish rejection candlestick and you break the range below to the downside, that's what you want. So that's more confirmation than the price. You can see in this case, it dropped until what? The next opposite structure, which is what? The support that we are currently inside. So that was the first sign of weakness in the bulls, because they are bullish, we are bullish. But the time you allow the bears to push the price down and leave you with the tail like that and still break the range and come lower than that candlestick, that's where you're like, nope, this is not in your control anymore. It's just that your structures are not yet broken, but for short term, the sellers can push towards your support, so that you can recharge and see if you can come back stronger and defend that support and still push up and make a new wave to the upside. I hope it makes sense. So let's look at this one here. Let's look at this one. Remember, these are all-time highs, ne? So look at this one. This was the all-time high, and then let me remove this. This was the all-time high, and then we turned to the downside, and then we came back around the same all-time high. And remember, there's something that caused the price to go down, which is why if you got a buy trade, you cannot just say, I'm bullish, I'm gonna hold until no. You need to ask yourself, why did the price turn here the last time? So what if it turns again? So in this case, what did it form? It formed the same structure that we have up there, which is what? A bearish rejection candlestick, right? So, but the difference between this one and this one is that when we formed this second one, we formed it and broke the range. That's more confirmation. In this case, you formed it, this one here, you formed the bearish rejection candlestick, you failed to come this side. So the bears did not give you that final confirmation, but rather they allowed the bulls to come and break the range on the other side. It's like this guy doesn't exist now. You can see that they went higher than that, and that's when they opened the room to go up until there. So that's what I mean. That's what you can. So the guy that asked me a question, that is what you can also use to say what? That's the confirmation if I'm waiting for confirmation to enter my trade. So now let's just finish up the setup or the analysis. Now we are inside the support, right? Let's just bring this. This is our, I said the trend line. You can put it there if you want, like that. So someone can say the trend line is broken. Yes, it has got higher chances of being broken, not yet broken. And keep in mind that this is a weekly chart. It being a weekly chart, it's only Monday today. We don't know how this week is going to end. We don't know how this candlestick is going to end. This candlestick can still push up to at least there and touch the trend line. And then you're like, oh, we haven't yet broken the trend line. Or you can just come down and do that. So we cannot yet comment on the break of a trend line. It's just that it has got higher chances, yes, because of what it started from outside. But again, it is not yet closed, and it's not even a daily candlestick, it's a weekly one. It still has 4 days to try and push to at least the trend line, then for it to remain valid. And we are still inside the support. So because of where you are, you can start searching for trades to go long. And remember, if those trades don't work, it means you're probably going to break that range of the monthly one. Then that's going to open a very big space to drop to the downside. All right. So for now, we cannot comment about going to the downside further. We could do that when you were there, you form that, and then you break the range. We can say you can come up to at least the nearest support. But in this case, you have reached that destination. You haven't broken any structure. Break the structures, then we can say, oh, this could be the confirmation to say that the bears or the bulls, yes, they're still bullish, but they could be going for what? A deeper pullback, just like this. They're still bullish, but they went for a deeper pullback. But as long as this deeper pullback does not break any structures of the bulls, we are still bullish on that time frame. So the same thing here, should you get like a break and then maybe a pullback, then that may open more space for a deeper pullback on monthly. But we will see. Yes, this is progressing. So on weekly, this is all that you have. You are nearest the support and the bullish trend line. Then it means if you to try and get trades to go long, it wouldn't be a bad idea. Let's see what we got on daily. Let's remove this one. So this is how our daily chart looks like, right? Yes, it does not mean that when you're bullish, you will remain bullish forever, which is why it is important for you to know how to manage your trade, for you to know how to pull your stop losses, for you to know how to, like trailing your stop losses, because this was not going to remain there forever. And in this case, the signs were there. The first sign of weakness was this. Remember on weekly, the first sign was what? That weekly bearish rejection candlestick, and then we went down and even broke that. So in this case, that's the first sign of weakness, which is what? Still same bearish engulfing. So this is the red candlestick that engulfed that. Then you're like, oh, what do we have now? And then the nearest structure at that time was around here, which is not a good structure. We know we are bullish at the time, but it's not a good structure because of what? This structure is formed by pin bars, so it's not a good structure. And by the time the price, let me put, that's why it's important for you to know that as much as we are bullish, there are times where I cannot enter. So do you see this vertical line? That's where the price sort of retested our zone, or just before that. Let's just maybe put it somewhere here, right? That's where we tested this area that I'm saying is not nice. Let's go back to monthly. I want to show you something. So that's where the monthly closed with a bearish rejection candlesticks. So imagine the on weekly, not the monthly, on weekly we are having a bearish rejection candlestick, and then on daily you are having what? Let's remove this so that we can. On daily you are retesting a support that does not look nice because it is formed by pin bars alone. So that's where you're like, no, because it's like I'm fighting that structure on weekly. So maybe I need to wait. This has got lower chances. It's a bad zone on daily. I'm trying to fight that bearish structure on weekly. It's not a good thing. And you can see that, yes, the bulls, it's their zone. It's just that it doesn't look nice. It's not a good zone, but it's their zone. They even tried to reject there, but it was just a bullish pin bar without the price breaking the range to the upside. They got defeated. You see? So that's why it is important for you to analyze each and every time frame. Look at the bigger picture, try and narrow it down so that when you're making your decisions, you know that you don't want to go against anything. You need to know when to stop trading, even though the trend is still moving up. That's what I mean, basically. So on this one, we are also bearish, right? And we've broken, let's see where we are now. We are bouncing, remember, on weekly, you're bouncing from that weekly support. Here on daily, you're bouncing from, you're touching this nice looking daily support, which is the one that initiated the whole strong trend to the upside. And then, yes, we did have one here, we did have one there that were violated when the price was coming down, simply because of what? When you touched this, something was happening on weekly that didn't allow us to try and trade that one. And then even the second one didn't hold. And you can even say that, let me see, it's just that the price doesn't look nice when it was going up. Maybe if you wanted to force a trend line and put it there, you can say the structure has changed. We are no longer bullish. That's why buying these zones, if daily was my execution, was not a good thing to do. So now, because of what? We are inside this. I understand daily is also bearish, but the difference between this and this is that this one here, it is located inside a higher time frame structure. You have got a backup from weekly, and weekly is not yet bearish. So that's why you can say this one, I can take it. I couldn't take this one there. Sizakele, the lady in group 2, I hope when it comes to, because you texted me earlier on mentioning how to pick a good zone between the two. So you're going to assess all of them and say the number of candlesticks, twist to one, and all those stuff. But you still have to bring in the bigger picture to say, because this one, it's a nice support, but we are no longer bullish. Why are we even talking about buying from the support? If daily is my execution time frame and daily is not bullish, I cannot execute. So this one I can take because of what? Yes, we are not yet bullish, but it is inside the higher time frame structure, which is weekly, and weekly is still bullish. So that's why this one scores higher than that one. I hope this one it's clear to you, especially because you're the one that asked me a question not so long ago. So we can just conclude by saying on daily we are touching a daily support. You're more than welcome to search for trades there. And then the disadvantage would be that we have this thing here, which is not so far from our current structure. So when you have those trades, you need to be worried of this guy. We need to be worried of this guy. And remember what? Remember, even on weekly, we're inside the support, but you are slightly outside your trend line. So what if this goes up there and it doesn't touch the trend line? Or let's see, it's most likely going to touch it. But I'm trying to give you different scenarios here so that you think to say that if this doesn't happen, then what? So let's go back to weekly and see what you got. I want to see if the price goes there, it's going to touch the trend line. let's just maybe start it from around there. Okay, so if the price goes back to that trend line, it is most, I mean, to that horizontal line, it is most likely going to touch the trend line, but we'll see about that. We will see about that. So if it touches the trend line, remember, you're going to say the trend line confirmed, not yet broken. But if it doesn't touch it, the trend line it becomes broken, and then we can say maybe the structure is changing. Maybe that's where the sellers are recharging to go back and defeat that support. And even on monthly, those long rejection candlesticks, maybe that's when it'll be coming lower than them and have that deeper pullback. So that's if you break that structure. But until then, we are not allowed to. Currently, we can't go short. So even if you were to try and go short here, maybe on a smaller time frame, yes, you can do that, but don't put your TP there. You see, that's why you're pushing it. That's why I'm saying, yes, you can take your sell on your smaller time frames, exit on smaller time frame structure. Don't push it too far and say, I'm taking a sell here, I'll exit next year. It's possible, but if you look at the current structure, it doesn't allow you to do that. It's low odd. You see? So that's all that you have on daily. You are testing a very nice looking support, a fresh one, and the nearest resistance is there. And because the movement to the downside was very smooth, we don't have a bearish trend line. So let's now move to H4 quickly. This is our H4 structure. And remember how you find that zone. You just find it from this. And then the nearest resistance was this one here. But because we understand everything was bearish, pushing down nicely. But this one here, this is how you make your decisions. Still addressing uses again. This is how you make your decisions. This is how you say, this one I'm not going to take. Why? Because we are inside a weekly and daily support. Me trying to fight those with the H4 resistance is not going to be a good idea. Yes, the price, when it touched this resistance, it tried to reverse by forming this candlestick to the downside, but that was it. The price got reversed and it broke that structure. It broke that resistance, but we don't yet have it in terms of a trend line on this time frame, because the structure here looks slightly different to what you had on. Even if you draw it from there, that's still fine. So this is your H4 trend line. So you need to keep in mind that the only thing that you need to keep in mind is that the movement from this guy here, he pushed up and broke the resistance. So he did something. So keep that in mind. Keep that in mind. Should the price move and do that, then you come here, you can buy until this. Because remember, this horizontal line marks what? The beginning of your daily resistance. So now if you are buying, getting those buys from, remember, you're from the daily, you're not going to neglect this H4 resistance, trend line, because of what? It is not yet broken. So you can use it to exit. Until it is broken, you can trade against it. But if it's not yet broken, you cannot trade against that. So currently, the price is approaching H4 trend line. So this one here. So if maybe it has one candlestick outside, then you can say if it pulls back to this zone here, you'll say this support is a very strong support because it broke the resistance and it broke the trend line, right? So that's why I'm buying the pullback to it and hope that that will have a nice impulse towards the next opposite structure. So you can approach it like that. So that's what you can expect from this one. So I don't think it's necessary for me to go to even H1, because I'm just showing you what to do when you're doing your analysis, which is what I teach. If you're interested, you can just hit me up on Telegram and we will take it from there. So here it means the next opposite structure is this one here. This is your H1 resistance, and it looks like it's going to be around the H4 trend line, right? Because in terms of a trend line on this time frame, it's definitely here. So maybe when the price gets there, if you got those buy trades, you are exiting. You can't trade against that H4 trend line. It is not yet broken. We don't know if it's going to be broken or not. We understand you are coming from a what do you call this, a weekly area of support, but we don't know. It can be a weekly support. We can still bounce and do this on smaller time frames, and when you check weekly will just have one strong candlestick as if nothing happened here. So that's why it is important to understand these different scales, so that you don't make your decisions based on weekly. You can't make your decisions based on weekly structure, whereas you're trading H1, right? Because you are going to interfere with a lot of stuff along the way. So now when the price gets there, you can just look at how it reacts, and then if you feel like you get enough confirmation, you can maybe sell towards this trend line or sell towards this area of support, and then you're out. It's a short-term thing. We're not going to go all the way to the downside. It's a short-term thing, right? Because if you're holding it for too long, you're going to end up fighting the daily and the weekly area of support. So you need to understand that when I'm talking of key areas, when I'm talking of key structures, the next opposite structures, I'm talking about those structures. They must be found on the time frame that you're trading. You can't trade M15, set up your take profit, based on monthly. What about all the time frames you're skipping in between? Are you just neglecting their structures? You see? So that's why you need to make sure if you get your confirmation to sell there, you will sell and then exit there. But now, because of where you are, this might end up even having a chance to go to that 26013. But we will see. So that's basically how you search for your trades. I really hope these videos are helpful. And if so, just give me a thumbs up. And if you haven't subscribed, please do so that this video can reach a lot of people. And if you also have friends that you feel like they also need this kind of information, you can just refer them to this channel. And again, if you are interested in learning this strategy even further, to know more finer details, you will just leave a comment and then I will get back to you, or the number that I showed on the screen. You can just text me on Telegram and then see if you can't join in the next mentorship group. But until then, this is the video that I have for you guys. I promise that I'll give you at least one video a day. So this is the video for today. I'll see you tomorrow. Thank you.